Welcome to Coleman Report Live. I'm Bob Coleman, and we're talking Main Street and the small business lenders who help it grow. Lance, Chris Hearn, thank you very much for joining us on your weekly basis. Joseph's on the beach. I understand there may be some Mai Tais involved. So
I hope so.
Yeah, no, he's in Florida, and good for him. Chris, we have a lot of news, and then we don't have a lot of news. But let's go to the polls right away, which is number one. Did your lending institution make more PPP loans in 2021 versus 2020? The reason why we asked this question, there was a fascinating article in the New York Times regarding this process with one of the people you work with, and you were mentioned positively in the article as well. But part of it said there were more loans in 2021, right, Chris?
Yes, way more in 2021.
And the other thing, oh, okay. Very
Wow.
good. Surprised at that.
Yeah, I am too.
Yeah.
Well, I think there were a lot of institutions that did not do the second draw loans. So that may be part of that. Number of institutions I'm aware of did the first draw loans in the first round and did not participate. I'm sorry. There are some institutions that did not participate in second draw, and there are also institutions, Bob, that participated in second draw but did not do first draw loans in 2021.
There was a generic statement in the New York Times article that said the fees were way up for lenders in 2021. And I didn't realize the impact of this. It sort of sloughed it off at the time. But under 2020, the fees for a smaller loan went down to $500. Then Congress, and for an incentive to make those smaller loans, kicked it for $2,500.
That's right.
Chris, I know you need to be careful. You got partners and you got SBA regulating you, whatever. But did that decision impact on your commitment to PPP, or you guys? I know what you're going to say, but that's fine. You guys always just gonna go after that market?
No, we thought that market was definitely served, the smaller loans, the loans say under $30,000. But it certainly helps that Congress put that in place as part of the law that they signed, that they put in action late December for this round of PPP. They certainly incentivized lenders to actually try to help that underserved market. And some of them did, and obviously some of them didn't. We were one of them that really put a lot of time and resources into that underserved market, and we're quite proud of having done that. And I know that's what SBA wanted.
That's what Congress wanted as well.
That's right.
Yeah. This is certainly not a situation where someone can point a finger at these lenders and say, they did it because of that. Hey, that's the whole point. And you look at the infrastructure, Chris, that you had to build and all these other lenders had to build.
Yes.
It's not like you're taking the money and joining Joseph on the beach.
No, I still have yet to go on vacation, and going close to 2 years now. So, yeah.
Number two, what percentage of your SBA loans go to the original owner of the small business? Delaney did a nice article on Monday, which we said that 2/3 of small businesses are operated by the founder, which means 1/3 have either been acquired or second generation. And that was an eye-opening stat. I didn't realize it would have been that large. Let's see what you all say out there.
I think there's going to be a huge transition because, Bob, I was born at the tail end of the baby boom generation, which means there's an enormous number of entrepreneurs who are, Bob, you're surprised by that, but enormous number of entrepreneurs who are going to be selling or transferring ownership of their small businesses to relatives or selling to an outside party.
And that's interesting. And Michael, go back to that poll results, please. So half. So we got about 90% to the original owner, and only 10% under that. That's certainly going to change in the next 5 to 10 years, and we bring that up because there's going to be a lot of lending opportunities in BizAc right now. I think business acquisition is number 2 on the list. It's becoming more and more prevalent, and we bring that up because business acquisition loans are tricky, Lance. They have special SBA rules that aren't there for conventional lending. Just real quick, how significant are the differences for SBA business acquisition than, say, a conventional loan?
They're not huge, Bob. I mean, there is a required equity position in a business acquisition loan. Probably one of the toughest things with a lot of small business owners is the seller's going to have to provide 3 years worth of tax returns and sign a 4506T to allow them to get transcripts. And, most sellers will do that, but sometimes you run into a seller that's had a business for 40 years and he's like, why do they need 3 years worth of my tax returns? But
a lot of money.
It's a conversation we have with business brokers all the time. The smart, sophisticated business brokers know to ask for this, know that SBA 7As are a very high probability of the financing that will take place in these smaller business acquisitions.
Right, because of the collateral issue. Yeah,
That's
there's not
right.
enough collateral to support that.
well, and Bob, sometimes it gets fun and complex on the equity injection because there is a minimum requirement, but that can include some seller financing on standby. And I've got tickled. You have quite a bit of involvement from CPAs quite often because it is a way to defer some of the tax consequences. And when they figure that out, sometimes they'll step up and even do more seller financing.
Yeah.
I'll give you guys a couple statistics real quick. I'd written an article in Forbes right before the pandemic hit. Terrible timing, obviously, but I called it that we're living in the age, the golden age of business acquisitions. And the reason is 9,000 9,000 baby boomers retiring every day for the next decade, and they own 57% of all small businesses in America right now. So this is going to be huge, just a tsunami of business acquisition financing here.
There's a lot of wealth in that 57%.
That's right. That's right.
So I think the takeaway that we have on this is, Chris mentioned it, is get to know the business brokers in your area. There's some very, very good ones. There's some very, very bad ones. You get to choose very quickly who you want to work with. But make those connections. Let them know that you're available for that type of financing, and they figure out a plan to go after that market. It's
Bob,
Go ahead, Lance.
One good takeaway too in working with business brokers on business acquisition loans, I used to do this with a friend of mine who owned a business brokerage firm. I would go in and do training on the SBA requirements on business acquisition loans, and then the people that were referring business had great knowledge on how to put a package together.
And I know there's been a couple of bankers have gone into that. Chris, I don't know if you do business, Paul Erie out of Florida. And now he's now become a business broker. And you talk about
Yeah, I think he actually specializes in insurance agencies, which is obviously a big subcategory within
right. Yeah, and that's great.
Small space. Yeah.
Anyway, so get to know those business brokers. We're bullish on it. You have to know how to structure them because, as we said, you're going to have a collateral shortfall, so we're going to have to make that up. You got to make sure cash flows, and there's some good analysis that needs to be done. And Lance said you can go down to 5%, but Lance, a lot of times we don't want to do that. We want to have a good 20-25% equity in the transaction.
It depends on the industry, Bob. As we always talk about, the 50-10-6 gives us minimums and maximums, but it doesn't mean that as a lender you have to be, right at 10%. If it's a restaurant, you may require more.
I'm going to read this quote, Chris. I'm not going to put you on the spot on it, but fascinating article in the New York Times. Grab it. Their theory is I think it's a press release for these two companies, Wampley and Blue Acorn, or I don't know. And they're attributing all the PPP to this platform. Well, fine, but they're not the ones who are funding the loans or doing the work. But I think you can give some props. I don't think they deserve all the credit that the New York Times is bestowing on them. But I will read one sentence, which says, let's see, Adam Siri of Harvard Small Business is one of them, and he said it's an amazing team effort. They're Wampley's largest lenders. Others had a smooth run. Dan Broke, an Uber driver in San Francisco, saw Wampley's ads. There was a picture of the ad on a bus. He had a $10,000, $477 deposit, which for an Uber driver is a lot of money. That can go a long way to help he and his family. Funded by Fountainhead SBF, another of Wamley's partner lenders, in his bank account. For that loan, the process was, quote, flawless, he said. Congratulations, Chris.
Thanks. I'm glad it was flawless. We had a few that weren't so flawless. So just by sheer numbers. Just by sheer numbers. Yeah.
Take it when you can get it. I know. We talked about this. Here are some cool stats that we wrote about today. 67% of businesses employ workers. And that's interesting in terms of what is a small business. There's never been a good definition of that, but more and more of this I see is that they're defining a small business is someone who employs someone else. So an Uber driver, he or she, they're a sole owner and they're out there. And so here they're calling small business someone who employs someone else. Okay, fine. Let's see, 20% purchased the business, 7% were gifted their business, 4% owners inherited their business. How do you gift a business? Well, I guess my restaurant friends, when COVID hit, the owner threw up his hands and basically, here are the keys, who wants to take it over? And they took it over, the employees took it over. He said, I'm out of here, I'm not gonna. So I guess that's how you gift it, Chris.
Well, I think you have a generational transfer of the business too. So there's some tax strategies for the founder gifting it to his or her children. So yeah, that's another way that it often happens.
80% of businesses that are 2 years old or younger were started by their owners. That makes sense. Owners of businesses without employees are more likely to have, founded their business. So, but as Chris said, that's an amazing stat. 9,000 baby boomers a day are retiring, and that is an opportunity for that. Shuttered venues plugs along, and this is as of last Monday. Michael, if you want to throw up that slide, please. Michael. All right, I'll read it.
I've put up this. Oh, hold on. I'm sorry. I realized we're paused. My bad.
And while we're talking about gremlins in there, we were notified by our internet provider that we may not be around on Friday. We may be off the grid. So Lance has graciously consented to clean it up if for some reason we're not around. Anyway, shuttered venues, 50% apps have been decided, decisioned. SBA is reviewing 20% of those, 21% have not started. 2,400 grants awarded, $1.5 billion. Of that, $720 million has been dispersed. You notice we don't have a slide on restaurant revitalization because that is in abeyance until the federal courts, well, they've made their rulings on the injunction, and then they're going to have more rulings. So that's certainly a mess.
Wasn't shuttered venue, wasn't the total amount allocated $10 billion?
You're still,
I could be wrong. That could be high, but.
Yeah, the answer is there's still some money. I'm not up on the stats on that, obviously, because it's not a lender-driven program. Other than I know there's problems. Lance and I have talked about this, Chris, is why SBA made the decision to direct fund this themselves and not use the proven, successful, flawless relationship they have with their lenders.
I don't know about and I don't know if it's flawless, but yeah, it is a head scratcher that SBA took this on themselves to administer this one as well as the restaurant fund. But
all right, whose dog is that?
That's mine. Sorry, one of my dogs. I apologize.
All right, Chris, I'll ask you this question because we haven't heard anything. Any progress on 504 program refinance revisions? Provisions?
No, surprisingly, nothing. I don't know what's going on. I feel like about every other week we talk about that briefly, and there's just no update.
And last question for Lance. What is the last day of the guarantee waiver?
It's September 30.
It is.
And a lot of people have asked.
Go ahead.
A lot of people have asked questions as to whether funding might run out. I don't think so, but September 30th will be the last date for the guarantee fee waiver. I do not in any way, form, or fashion, and Chris, you might help me with this, I don't think it'll extend beyond September 30th.
Yeah, I was going to ask Chris, you're talking to you're on the Hill talking to people. What do you hear?
I'm not, there's a lot of talk about it, but there doesn't seem to be a whole lot of political capital put behind it right now.
You know, I know
It would shock me if something happens next year. But again, with the economy recovering, it just, every day when you see the statistics and what's happening in the economy, I just think it makes it a much bigger hill to climb to try to get some of these things extended.
No, absolutely. What do you think's the number one, for SBA lending, the number one focus out of Congress these days? For, I guess, for all small business, all of these SBA related programs, which one are they most interested with?
I think they want to see as many PPP loans forgiven as possible as soon as possible.
Fair enough.
I think anything else is someone just lying to you. I think that's what SBA and Congress and the lending community all want, to get this stuff done and in the rearview mirror.
Hey, Chris, this came out this morning. You and I haven't had a chance to talk about it, so I'm going to hit it to you cold. Are you? It's called the True Lender Rule. It has to do with fintech companies, relationship with banks.
Right.
Are you involved with? Do you know about that?
Just a little bit. I know it's relating mostly to like the merchant cash advance.
Right.
Yeah.
But if it's being, for example, by Fountainhead, then it's got to say it's being funded by Fountain, or it's by Fountainhead and not the fintech company. Is that what this is saying?
Well, I think there's in the MCA world, I think there's a number of really, let's call them more sophisticated brokers who really have a depository institution, or maybe somebody like us who's a non-bank, who's licensed, standing behind them, who's really the lender of record, not
Right. That's what they want to. Yeah.
Yeah, that's what I think they're trying to just get some more transparency on this. Obviously, the merchant cash advance industry is not very favorable to these things. You know, the CF, what is it, the CFTB, and some of the other online lender associations, I think they're okay with this. They'd like to see it continue, but I think there's a number of other regulators that are just a little frustrated. They want you know, a consumer to feel like they're getting the information directly from the lender who's going to make the loan, and not.
Well, what they're saying, the OCC is saying, actually Congress passed this resolution. The OCC is saying, we don't have a problem with fintech lenders. We have a problem with disclosures. So what this article says, as long as the national bank, because that's what they're covering, is named as the lender on the original loan agreement on the date of the origination, so long as it funds the loan, then the bank is considered the true lender.
That's right.
And it needs to be on the note. And yeah. I don't, unless I'm missing something, I have no problem with that. Do you, Chris?
No, not really. I just think the MCA guys for a long time have tried to, you know, put themselves out as the lender, and
right.
It's not.
I know there was one of our friends in Pennsylvania had issues with that, and that was resolved in terms of this. The takeaway is, if you're dealing with a broker, we want to know who the underlying lender is. And that's the issue. Lance, we're finishing up cutting your award-winning loan closer training. People are signing up. Thank you very much for that. Give us a 30-second plug on it, Lance. I know you enjoyed it.
Loan closer is such an important part of protecting your SBA guarantee, and it was time to update everything and bring the loan closer course compliant with the 50-10-6, and we've done that. If you have loan closers that need training and certification, this is a great way to do it. So I encourage you to sign up now. Sign your closers up.
We're going to start that. We're going to have a meet and greet the first week of July, and we will. Chris, I know you're busy. Thank you very much. I'll let you go back to your important project you're working on. Go ahead. Tell everyone what you're doing. Go ahead.
Well, I've got one screen that's my Euro game on, the England-Germany game, which
all right. Well,
I told you before I got on, there's a famous quote by an English football player that, you know, the 22 men chase the ball around, and at the end, at 90 minutes, the Germans usually win. So there you go. We'll see.
Very good, Chris. Thanks a lot. Lance, as always, thank you very much. We'll see you all tomorrow. And thank you for joining us today for Company Part Live and supporting America's Main Street, one entrepreneur at a time.
Have a great day.